IMF has cut the global growth forecast. And to discuss more on that, we're joined by Peter Cardillo. He's the Chief Market Economist at Spartan Capital Securities. Good morning, Peter. Can you hear us?
Yes, I can.
Okay, Peter, IMF has gone ahead and they've cut the global growth forecast for the first time in 2 years. What do we kind of make of this development that's come out?
Well, I think this might just be the beginning of a series of cuts going forward. Obviously, trade disruptions are going to take a bite out of the global economy, but not only the global economy, but I believe that we're going to see a cut also in U.S. economic activity. The longer the trade disruptions continue, the greater increase of economic slowdown will be revealed, and I think that that's key here is how long the trade disruptions will continue. So I kind of think in a certain respect it might be a wake-up call for the United States and, of course, its trading partners to make deals, and I suspect that we're probably going to get a deal out of China by year end, and of course that would be key. If there is no agreement with China, then I think we could see some real downturn in economic activity, and obviously on a global scale.
Okay, Peter, they've also come out and
joining into the conversation.
Okay, just wanted to go ahead that they've also said that the outlook for the emerging markets is weakening quite a bit. Do you think that there will be ripple effects in India as well? For now, they've held on to the growth rates for India, but what do you see the impact of Turkey on India?
Well, look, when we talk about emerging markets and we talk about trade disruptions, obviously all the emerging markets are going to get hit. There'll be those countries that will get hit less and will have perhaps a softer economic environment as opposed to the countries that will have a solid negative economic activity. So I think, as far as India is concerned, things probably will slow down, but not. I don't think it would, in terms of percentage-wise, that we could see a slowdown that may actually hit China. And so I would kind of say that India is not going to probably get as hard hit as the Chinese economy.
Right, Peter. Just wanted to get a sense of the fact that, specifically talking about India, IMF seems to be extremely positive. At least in the medium term, they've retained their growth targets for India. But at the same time, they're saying that the global trade war that is, taking place, especially between the US and China, will impact the global markets at large. So where is it that you believe the tilt is likely to happen? I mean, will India benefit as a result of the ongoing trade war between China and the US, or do you think it will also be a victim of the entire tension and the global trade war concerns that are playing out?
Look, nobody benefits by a trade war. Everyone gets hurt somewhere along the line, and as I said before, there will be those countries that will be less hard hit as opposed to those that will be hit harder. As far as India is concerned, we're talking about two different types of economies. One more geared to technology as opposed to industrial production. So obviously, India probably would have less of a severe impact, but nevertheless, there will be some sort of negative attached to to tariffs, and of course, trade deals still have to be worked out between the United States and India. So, as I said before, the fact that the IMF cut the global gross domestic product, I think could be a wake-up call, and it might just induce everyone to sit at the table and to work out some sort of trade deals.
All right, Peter, we'll leave it at that. Thanks much. Really appreciate you taking time out to talk to us about the IMF report and what it means for global economies and how the IMF is actually reading the economies of key countries at this point of time.